depending upon the narrative, of course. But it's all about basket trades. So when we think about the pound this morning, this was all about that basket. We showed the accumulation idea, we talked about the process, and sure enough, in live time, the price went from 40.10s up to 40.40s for 30 pips. Beautiful. So welcome, guys. I hope you're good this morning. We'll cover that trade again in Classroom so that we can obviously get it recorded. We'll look at it in a little bit more detail because it is quite an important aspect of trading for you guys to understand. Okay, so data-wise, it was obviously a European holiday this morning. The Germans and the French were on holiday. So quite quiet, but drifting in terms of trade opportunities, drifting. 30-year bond auction last night, Japan, nothing much to lean against, no UK data to lean against. And the big trade that we might have caught your attention was, we were telling you we were still selling oil. Guess what happened to oil since we told you last night we were still selling oil? It dropped another $1,600 a barrel. You couldn't make it up. Last night at 11:30, last night's tweet on oil. Yes, guess what? I know it was a little bit cheeky, but guess what? We're still selling oil on upticks. Most recently, we sold the 66.40s. Still no reason for me to be a buyer. And that was at 11:30 last night, London time. And if you look at oil, what happened after that, you'll see that oil went from 65.80s to 64.20s for $1,600 of sell-side, amazing sell-side profits. I got on oil again from a live tweet that you could simply have said, well, if you're not going to be buying anytime soon, what the hell am I doing? I should be short, right? And you'd have made yourself your week's money, possibly in some cases for some people, your month's money on that one trade last night, guys. And it's happened so often in the last 10 days or so that you've just got to laugh at how good oil's been. Assuming, of course, you're trading oil and you're making all this huge cash. You know, Sammy's probably bought Amsterdam by now. I mean, he's probably been spending most of his life in Antwerp. Just jump across the border and see about getting some of the old sparkly stuff with the amount of money you've made on short oil trades these days. It's just been so good. Literally so good. But data-wise, as I said, nothing much. We've seen a little change in bonds, and we had a chat about developing out spreads and various beautiful other things, and it's done really, really well. So for me, I missed the drop. I didn't get involved in the drop. We didn't have any value to get the drop on the books. I was a buyer of bonds early morning this morning. I bought bonds last night. We managed to buy into last night's close. There was a good 10-year bond auction last night at the close. I quite liked the idea of long bonds. We made a lot of money on the long bond from last night's close. I did buy the pullback at 7 o'clock. We got into 8 o'clock here and we simply couldn't get any trade on. So I was distributing. I was looking, and then the price started to break. I had to close out fast and furious. We started to lose a lot of value very quickly. So obviously I want to try and be in a short bond trade because obviously we still have that macro narrative that suggests we could be down as low as 180 on bonds. But, I want to try and be in the long, but I just haven't been able to get into the long. I was going to sell some business at 18s this morning, but a certain person by the name of Reeve stepped in front and sold before I could even get filled. What a bounder. So anyway, Reeve came in at 16s and 17s. I'm sitting at 18s, waiting for all the stops that are running above that top edge to get some business done on the short side. And Reeve merrily sold into the 16s and the 17s and rattled the price down. So that was my chance of getting filled. Gone in a flash. Screwed over by the pupils in the room. Unbelievable. The pupils become the master, guys. The pupils become the master. So anyway, we started to buy some bonds off the bottom edge eventually at 30s, 31s, 32s, zeros. And we got a good response to that for a measure. We got a half-back trade opportunity to buy bonds again off the 4s, the 5s, and the 6s. Got a very good response up to the 22s. And I still can't see an opportunity to do anything other than buy bonds on downticks at the moment. So long bonds on a downtick. Remember, we do have supply this afternoon as well. We've got the 30-year bond auction. Remember, it was a good auction yesterday, and the price is just a little bit elevated to where it was yesterday's auction. Remember that auction itself. This is the auction itself here. So when we're looking at the bonds, just don't lose sight of that line there, because that's a good auction price. You say, what do you mean it's a good auction price? Because that's where we got a good auction from. That price seemed to be accepted by the market as a good price to get for bonds. So based on that, we now want to make sure we measure the inflation break-evens today for tonight. We want to watch to see how the inflation break-evens line is doing against that point here, where that first arrow is located. And we want to try and get a read on today's bond auction at 6 o'clock to see if the inflation break-evens are better or worse by 6 o'clock. That'll tell us whether this auction should be successful or not. It was a very successful auction last night, guys. Obviously, when we look at auctions, we're looking at a couple of key metrics. We obviously 41 billion, quite a sizable 10-year quarterly supply number. The high yield was 1.684. The when issued was 1.697. The tail was minus 1.3 basis points, which means it was a stop through. You'll see that that stop through of 1.3 basis points is what a minus tail is. Usually a tail is a positive number plus 1 basis point plus whatever. But this was a big tail, which is a big minus tail, which is a big stop through. That's bullish bonds. The second thing we look at is the bid to cover, 2.45 against 2.36, so a lot of bids. And obviously the final thing that I really pay a lot of attention to is the dealers, 19.5%, a lot lower than normal. And if the dealers are not getting as much of a fill, that means that there is a lot of demand for bonds. If I see that auction, guys, I will nearly always be a buyer as soon as I see those numbers. So this gives me an idea that we're buying the auction. I've said many times in the past, and has been confirmed by the guys in the room, well, Reeve, that I have mentioned it in the room, so I don't have to worry about not having mentioned it. And what I mentioned was that if I am a buyer, if the auction is good, and we get a positive response from the auction, at 8 o'clock that night, 2 hours later, we should be buying bonds at the close. Nearly always they'll try and take the price down into 8 o'clock, which is exactly what they did. I bought the close in here, and I bought pretty much everything after the close here. So I bought here, I bought here, I bought here, and I bought here. So I was very, very, very long bonds. So we were quite happy to see the bond price moving out in the overnight session. We started to buy against some key levels in the background. We started to buy against the high auction price, which was here. So you can see that high auction price is basically the price that people started to sell back into it. So they thought it was a good price here, but they didn't think it was a good price here. So I have to pay that attention. So when a price comes back up to those areas, I start distributing. Pretty simple stuff, right? Pretty simple stuff. So this auction process gives us some really good ideas. This is the auction price level that we have to be mindful of course. And that auction price level, if the price is below it, we can expect to see a reasonable buy-side auction again for the 30s. If the price is above it, it leaves it a little bit more awkward for us to try and interpret. So we have to be very mindful to check the inflation break-evens have improved for the long bond when the US market opens. Make sense? So I'm a buyer of bonds just now on downticks. There was a very, very nice bottom edge developed here, so I don't know if anybody decided to buy some 14s here on the pullback. It's rallied back up to high of 20s. I don't see any reason why we can't be trading up slightly higher still, but obviously we're still trying to make sure we still have a concession, so be very cautious about buying at too high a level on bonds because of the concession building process. So, as I said, welcome in, guys. We've talked about the FOB spread, we've talked about the triangles on cable, and we've been able to get the guys kind of back online. Max has had a very quiet morning. He's been bored. He's missed a few trades by literally a tick or two. But Max has been very, very, very quiet. He had 2 trades from 7 o'clock, and that was it. So Max's trades so far this morning, 2 trades, both in the same area. Sell side once, profit. Sell side twice, profit. Hasn't done anything since then. Missed a few trades by literally 1 or 2 ticks. Hasn't bought the bottom edge, hasn't sold the pullback, hasn't bought this rally, hasn't sold the top edge, hasn't bought this pullback. Just missing out on some of those opportunities, and that's a pity. But it is what it is. 2 winning trades out of 2. So based on the 2% bracket, 10 tick bracket, you'd have made 4% your money this morning on 2 trades. Don't think anybody's going to be too bothered. You know, when you see the size of the moves on the Nasdaq, 2% is obviously not exactly earth-shattering science, but you get the basic idea. We've also talked about the concept of buying into for things like the bottom edges and the top edges. We talked about the sterling trade actually live, and we were chatting about the book change. Unfortunately, the Sierra charts is working this morning. God knows what the hell's wrong with this. But anyway, Sierra charts is working this morning on this second screen. And, you know, we were talking about the idea behind book bids, the idea behind watching for bids coming in, seeing bids coming in, executing bids at the right time of the day when we were wanting to be long sterling. And we talked about it here as well. And obviously that trade was talked about live in the room as these bids started to show up. And obviously the takeaway from those bids has been pretty spectacular. When you look at the overall shape and process of that, you can see exactly how that trade did evolve, guys. When we were talking about this live in the room, we were just talking about the overall process at that stage, weren't we? Well, look at what happened next, guys. It was pretty crazy good, wasn't it? So this was all talked about live on the right-hand edge at the time to show you guys what we were talking about bid watch and all of that kind of stuff. And you can see that the outcome, which hadn't yet happened, turned out to be absolutely outstanding. So yeah, I mean, it's a process, isn't it? We talked about that idea that execution is one of the biggest challenges for you guys as traders, because you can all see the trades. You can all see why I'm a buyer of bonds or why I've been selling oil so much and why we keep selling oil, but it doesn't necessarily mean that that converts into your book. It converts into some of your books for sure, but there's other people who are simply not getting that conversion. They're not getting the deal. They're too passive. They're too aggressive. So there's a reason why they're not being successful, and maybe they're just terrible traders. Maybe that's what needs fixed. Maybe the analytics is brilliant, but just the trading just lets them down every time. And that's what you've got to look at as a trader yourself. You've got to ask the question, should I be trying to work on my trading, which is what the Monday Club's all about, of course, is trying to find different ways to express a trade, trying to find a different way to get a short trade on the books, either through market orders or limit orders or combination orders or whatever. Trying to find the best way to get a trade on the books becomes your key core pursuit. You spend more of your time focused on the order flow and the limit orders and all the various elements, more time than that than you do on the analysis, which is all now in place. You now make consistently good analytical decisions. So we've got to try and get to that point for you guys. You've got to get to that point because it's all about practice in your world. I know how to get there. I'm already there with that trade, but you've got to try and get there if that's not quite you yet. So welcome in, guys. I hope you're all good. Data-wise, as I said, a little bit light today. No European data of any interest because of the holidays in Europe. UK, we've got coming up in just 13 minutes. We've got the core PPI numbers, 0.4%, PPI numbers of 0.3, so quite a soft forecast on the PPI numbers. And then we've got natural gas storage at 3:30. And that's us until the bond auction on at 6 o'clock. The bond auction at 6 o'clock for the 30-year is obviously going to be quite exciting based on yesterday's 10-year bond auction, especially if the bonds are below that auction price from yesterday. So welcome in, guys. Hope you're all good. Go grab some lunch. I'll be back in 10 minutes.